Yeah, Namaskar and a very warm welcome to today's webinar on electricity futures. I'm your host, Anindya Banerjee. This is a collaborative initiative by Kotak Securities and NSE. Electricity futures represent a groundbreaking opportunity in India's commodity derivative landscape with immense potential ahead. Joining us today is a distinguished expert from NSE who will bring the deep insight into this emerging market because electricity is highly technical, but at the same time, it offers immense potential and opportunity for both hedging and trading. So today we have the privilege of welcoming an industry powerhouse, Dr. Harish Ahuja, as the head of product and strategy development for power, carbon, and electricity derivatives market, as well as the main board listing and the social stock exchange at the NSE. He's shaping the future of the very energy and the financial markets. A former civil servant with an impressive 25-year career in energy markets and infrastructure finance, Dr. Ahuja has served in key government positions at the Ministry of Power, Government of NCT Delhi, and even in Andaman and Nicobar Islands. He brought that expertise into the corporate sector in 2011 and hasn't looked back since. But that's not all. Dr. Ahuja is also a trailblazing entrepreneur. He founded the India Go Solar, India's first solar e-commerce marketplace, demonstrating deep frontline expertise in renewable energy adoption. Academically, his accomplishments are equally remarkable. An MTech from IIT Delhi, an MBA from NTU Singapore, and a PhD in electricity markets from IIT Delhi underpin his strategic insight. He even authored the insightful book, Reforming the Power Sector Reforms, Multiple Conflicts, Democratic Solutions. Beyond his role at the NSE, Dr. Ahuja also contributes as a director of both the Power Exchange of India and the Receivable Exchange of India. Please join me in welcoming an unparalleled expert who brings unbeatable breadth from policy to practice, innovation to execution, Dr. Harish Ahuja. Over to you, Dr. Ahuja.
Thank you, Mr. Banerjee. Thank you, everyone. Gauri. First of all, on behalf of NSE, I really like to congratulate everyone who has played an important role in building this ecosystem. I think today being the first day, we had some internal targets, definitely in terms of understanding that what kind of response we get. But the way we are receiving the response and still 5 hours to go, almost 4.5 hours to go, I think this product acceptability of the ecosystem across, be it retail, be it SME, and I think I can say it by conviction because the early trends were coming from retail only, 1 lot, 2 lot, 3 lot, 4 lot, and gradually FPIs come, gradually AMCs come. So thank you very much. There are two ways we can start. I don't know how many of you had attended our previous webinar. Anindya, can you clarify how many people have attended this, or these are all new guys? Can you guide us here?
These are all new, because here we are able to address our clients, and even it's accessible by people through the YouTube live.
So can I do a specific? Can I make a special request?
Sure.
I think you'll be the first. You'll be the first. In fact, we had recorded my session with FAQs with my colleague. Would you like to see it? Recorded session just came live in
Okay.
2 minutes before. I'm
Okay.
here to answer all your questions.
Okay.
So
Fine.
one is you tell me what are your questions, I answer it, and then you go to the master class, and then again I come back. What do you suggest? It's live. I'm speaking there.
Okay, so it's
What do you say?
on a YouTube link. Is that?
YouTube link. I'm sharing it with you. I'm asking Tejas, do you got that link with you?
Oh, yeah, sir. I'm got it.
No. The link which now live. Should I share with you?
Yeah.
So I'm sharing it with you. In the
Yes.
meanwhile,
So if
just do me a favor, Anindya. What kind of questions coming in people's mind? Let them ask. Let them ask.
Sure.
Because I think I can start, because many times people would go through 45 minutes, 1 hour session, and then what they get is not that happy. So I'll not be very happy. So ask the questions. Let's start with the questions.
So viewers can actually start asking questions, because let's make it interactive.
Yeah. How many participants are there, Anindya?
It will be hard to say from here because it's on the World Wide Web. So yeah.
Okay, no worries. So, Tejas, come to our presentation first. Let me start the context and then we'll see how this goes, okay? Because everybody has come to listen to us, so we'll make it live, okay? Tejas, please upload the
Yes, sir.
presentation, not the video,
Uh,
presentation.
yeah. I would request host to give me access for sharing.
Yes.
Upload the presentation, please.
Kindly share the presentation
Yeah.
rights with Tejas, please.
Sir, it is showing the host isn't allowed sharing for this meeting.
Why don't you allow my team to be the
Sure,
host?
sure, sure.
Because they know my pace, and they accordingly change because we do almost 70 webinar we have done so far. Yeah. Go to slide presentation. Yeah, so
Yeah.
go to the first slide. Let me set the context first.
Okay.
So first and foremost, this contract is no more contract incoming or no more contract going to be launched. It has already launched, and as of now, when I see the consumer screen, I'm not seeing the member screen, my NEP screen. I can see almost 7,500 trades have been handled. Volumes have, I would say, lot around 160 crore turnover has been done, and we just got the message from our IT team, this kind of record for NSE. So this product has been accepted very well by people, almost everyone, the ecosystem, in fact. But before I go deeper into the product, let me ask you two questions, and I will expect that people will participate here. How many of you in your last 1 year or 2 year have got the call from your telecom operator, be it Jio, Airtel, or Vodafone, asking you that Mr. Banerjee, I'm Sunita from Vodafone, and I'm very happy to suggest that your mobile bill has gone up by 6,000 rupees because we are now charging new charges for data. 2,000 will charge you for the telephone and 500 for SMS. So your new bill is now 8,500. And Mr. Banerjee is quite angry, quite surprised because he has never approved this plan. But he had got this call from this lady Sunita from Vodafone, and he's saying, "But who has approved this?" And lady with a lot of composed tone and with confidence say, "Mr. Banerjee, we can't do anything. This has been approved by the regulator." Has it happened with you? Any one of you? Please type your message in the chat box. Has anyone got such call from your telephone operator or your telecom operator asking you to now you'll pay 8,500 without your explicit consent?
No, I don't think so, Dr. Ahuja. That has happened ever.
Yeah, but do you know it is happening every day in electricity?
Right.
And we are taking it like this because we have never seen that there could be some other way of working on this. Why can't we think like it could operate in the same way like telecom, or any movie ticket where they give the option and you choose which city you like to choose, or any aeroplane ticket, where you choose I like to use Make My Trip or Go IBBO, or I like to go direct to Indigo site and choose my options. Even if I'm paying 10,000, buddy, I'm clicking the button. Somebody else is not just saying that you are being charged. Okay, so this is happening across the globe. People have choice of supplier. People have choice to choose their power purchase cost because they actively participate in the power market. This is the first scenario. Second scenario, again, this is an open question. If this is Monday morning, you are getting late for your office, all set, looking very dashing, getting out of your home, and about to take the first step out of your home, with praying to God that boss should not be angry today because you're already late. Your wife calls you up, or your mother calls you up, or your girlfriend calls you up, and she said, "Doodh le lena, take the milk because I'm getting late." So you collect the milk, and milkman is outside the door. Just pay him and collect the milk, and you, with all of anxiety and anger, but because it's the dictum by your wife, mother, or girlfriend, you ask the milkman, "How much to pay, boss? How much to pay? I'm in a hurry. Give me the milk." He'll charge you 100 rupees for a liter. You give him 100 rupees and rush to office. And after 9 hours of hard work, like any Mumbai car, come back home and you ask your wife to make a cup of chai, and she said cup of tea, and she said but milk is over. She said but morning we bought the milk right at 100 rupees. It must be there. She said no. There was some guest, so it's over. You can call again the same milk wala, and you again call the same milk wala. He comes and he said this is your 1 liter milk, and this time when you gave him 100 rupees, he said no, this is 130. And you say, but you stand next to my office, I'm just besides my tower, residential tower. You are not traveled from Borivali to Vadala or Borivali to BKC against the traffic or for the traffic. Why 30 rupees increase? He said, sir, time of day. So prices changed. And with a lot of anger, you give this 130 rupees. Has it happened with you in the past, in a couple of months, I will say?
No.
I'm talking milk, very specific commodity.
No.
What I say, it's happened every day within the power sector, electricity.
Right.
Every day. You don't have any say. Because again, someone else is deciding the time of the meter for you, okay, time the tariff for you. Third scenario, which should be positive. I have given you two negative scenarios, at least make one positive scenario. You get a call from your Mahadishcom or your Tata utility, which is a Dishcom, or Reliance BSS Dishcom, and ask you, Mr. Banerjee, very happy news for you. You must be seeing rains are in surplus this year. Mumbai or the entire India is blessed with a lot of water, and this has reduced the power demand, and power prices are crashing. And we like to pass on the benefit to you. Instead of 10 rupees a unit, I'll pass on this tariff, and this time I'll charge you 7 rupees. And not for 1 month, next 3 months. Would you be happy to take this? Have you ever got this call from any of the supplier, Dishcom, in the past?
No. But yes, I would be happy to take it.
Exactly. So see, first two cases, you are saying no, but you have to say yes because somebody is imposing you. And the third case, where you are happy to take yes, you're never getting such calls, right?
Right.
It happens across the globe, where your supplier link your retail prices with the wholesale market prices, and if the wholesale price goes down. So for example, today I like to talk about today itself. Today we opened at roughly, I'm seeing the screen. Today we opened at roughly 4430, and no, I think it was high. There's some problem here. Get it checked. We got opened, whatever price we opened it, it went down, because during so if I do my calculation right, it will open around, 4430 is right. Correct. 4430 we opened it. Now it is down by 11%, 10.85%. If you see NSE website, August price we opened at 4430, and it never went high. It always went down. Lowest we had touched is 4301, and last which we are doing it 4365. Now what if I say, seeing this price, your supplier reduce your power, if not by 10% price, at least by 5%. That's already decided. Good thing, right?
Right.
It's happening across the globe. We do believe this product, which we are not going to talk about, can make this transformational change. If not today, not tomorrow, at least in the next 1 year. And that's the product. This is the impact of this product, which we do believe is going to change the way people participate in the entire power sector market. And when I say people, means you, me, malls, hotel, every customer. Because at this stage, there's no retail side participation in terms of their any say on the prices, But this product has this important feature where now you can buy at your own price, even retail can participate here and have a say. You can choose your prices even if not able to deliver or buy that price, but you have a market where you can say, I like to buy this power at 4365. This is my one lot, So this is the transformation impact of this power. Tejas, next please. So I'll give you a context, then Tejas will take forward from here. We will explain you a very basics, which is leading to this inefficient in the power sector. That's why you're not getting these 3 calls. Ideally, the first 2 things should never happen to you. The last thing should always happen to you. But it is happening because there are some fundamental inefficient in the present power sector value chain or in the market design. We'll talk very briefly about that. Then we'll come to direct to the specs. Tejas will talk about that. Then we'll talk about how exactly we are settling our price, with the PIXL price equation, which is volume weighted average. Last but not the least, we'll talk about global exposure, how exactly seeing the global exposure we are calibrating our product launch, and how exactly this product is beneficial to all, starting from generator, discount, trader, you and me, hotel, mall owners, etc., etc. Let's go to next. So, Tejas, can you start from here? I'm getting a call from CRC.
Yeah,
Tejas?
sure. So thank you, sir. So basically, we will talking about what exactly the power sector economics is all about. So to begin with the power sector economics, it is divided into four types, where we have generation, transmission, distribution, and the retail supply. So the electricity market has been characterized by different multi-buyers and multi-supplier forces, where fostering the competitive markets. Generation and retail supply operate in a content business model which will be driven by the dynamics, and generally they do not require a license. When contracts, the wire business, which is encompassing the transmissions and distribution, is a national monopoly, and it is the regulated business as well, requiring a regulated supply. First, talking about the generation side, which is preferably where the generator comes in, and suppose someone is generating the electricity. As of now, there is no license isn't required for generation itself, because you have two types of generation. One is the independent generation (IPP), or second is the captive generation as well. Second comes the transmission business, where the electricity is being transmitted from one end of the country to the another part of the country as well. So basically, this business deals with the wire business, where the network has been created to just transmit the electricity which has been generating from the generating station, and to get received to the distribution as well. So this transmission business is something which is related to the regulated business as well. Also, it is called as the wire business. Third come the distributions, so where just take an example, if I'm sitting in Mumbai, so I can select my discom as well. Like you have three types of discoms here in the Tata Power, or Adani Power, or the my state utility, and the different BST also. So this is the distribution business, where the different distributor distribute electricity. And fourth come the retail supply. Retail supply, which is very important to understand for all of us, like the commercial consumers and the industrial consumer, like the hotel, malls, are there, where they buy electricity on a very fixed cost from the discom as well. So this create a very challenges for the any retail consumer, like there is no bargaining power for any individual, just because they are buying same amount of tariff, they're buying electricity. So these are the challenges which you're gonna face for any retail consumer, because they're gonna buy electricity on a fixed tariff. So this limits their bargaining power for the user as well. So this is the overview of the multi-sector economics, where the generation, transmission, discoms are being there. Uh, and this slide, basically, we have what exactly the electricity is all about.
Let me take over from
Yeah,
here.
yeah,
Yeah, just go back, because
yeah,
retail
retail.
supply is the very important element. I was talking, when you don't get this call from your Tata Discom. The reason is because at this stage, distribution company, retail supply, both are bundled. Retail supply is a pure competitive segment where no license is required by any regulator. But in India, because they have merged with a regulated entity, so retail supply has also become a license activity. And retail supply is basically beyond meters. So up to meters, it is Discom. Beyond meters, the wire belongs to the Discom, wire belongs to the transmission company, you can say. But the juice flowing within that wire, or electron flowing within the wire, belong to third party. Similar to like GAIL is owning the transmission gas transmission line, but Adani is injecting his gas, or Total is injecting his gas, and they are paying charges for using the gas. So this we call open access. Everyone can use this regulated entity infrastructure by paying certain charges. Same thing is now allowed in telecom. Towers are used by Indus Tower, owned by Bhartiya Infom also. But anyone can use those towers and pay the prices just to use those tower. So, and the juice, either the call or the data is flowing off the Bharti Airtel or Jio or somebody else. So this is the way open access work across the globe. In electricity also, this is a global phenomena that open access is allowed. But in India, because Indian discoms are primarily government entities, and they are owning the wires, and they are loss making in terms of their power management, so they would not like to take away this business at this stage, but sooner or later it's going to happen. 2016, Government of India already presented an act, content versus carriage. This has gone to Joint Parliamentary Committee for discussion. But I think if this future phenomena happens nicely and things shape up the way we want it to, then I do believe two things are nobody can stop. One is market coupling, and second is content versus carriage separation, because ultimately the company market will show its true color when the retail supply segment get out of discoms, and this retail supply is managed and owned by very professional company like maybe Tata, maybe Reliance, Adani's, and even you and me can also, Kotak Securities can also open a separate arm and put efficient people and also manage some captive customer. Let's say entire BKC license, entire BKC clients can be taken by Kotak Securities. So this opportunity opens up. At this stage, being a bundled activity, it's a license activity, and very important fact: retail supply is a loss making. In PNL of any discom, 85% or 90% cost is up for retail supply because power procurement come here, and maintaining the wire, maintaining the transformer, meters, or some marketing here and there is part of distribution. But because retail supply is a heavy cost segment, losses also there because of the public good aspect of electricity. In the next slide, I'll talk about that. Next, please. So here comes the very fundamental nature of the underlying. I'm talking about 7,500 or 7,600 trade, in terms of volumes, 180 crore rupees of, trade volume. But the underlying is electricity, which is being traded in the spot market, and electricity cannot be stored. This fundamental nature of non-storable commodity create a lot of issues in terms of creating right market design. India has been fortunate in terms of there are many issues. Those issues have been somehow or other way have been sorted by CRC, Central Electricity Regulatory Commission, which is the spot regulator. There are a lot of externalities in the spot market which cannot be taken care by SEBI per se, because when we do deal in a derivative contract, all the problem of spot are taken aside. We think that it's a pure efficient market because delivery is not required. It's a cash settled market. It is electricity generated and consumed. There's no transmission bottleneck. It is not in my bus bar or your bus bar or your CTU periphery or my periphery. There's no auxiliary consumption. Who will pay it? Everything is taken out. So CRC has put in a very right framework in terms of allowing this commodity to come to derivative market. But this continuous flow and non-storability aspect affect the very nature, the way electricity is traded. The price can never be real time because electricity moves with the speed of the light, and when it moves at such a fast speed, the transaction could never be on time, because by the time we talk, even if you start thinking, electricity is transferred. So even today, whatever electricity you consume today, microsecond back has been generated microsecond back only. So how will you decide the price? So the market design is such the prices are decided ex ante, not ex post. Ex ante means before. Near real time is not possible because real time means transaction happened, and before we open our mouth, electricity transferred. So and this is the way things shape up. So globally, there is no day ahead market in terms of price discovery, but in terms of more imbalanced market, or RTM market in the way we take here. Globally, there are only futures. So before prices, the power is transmitted, it's not a storable commodity. So whatever price you're generating right now, you have to consume right now. So to take care of this before price discovery, they have created future market, very advanced, mature future market. 1+5 year future, 1+7 quarter ahead, 2 years ahead future, 1 month ahead future, 1 week ahead future, even weekly future, weekend future, day ahead future, and then options, and then CFD. There are multiple layers of this. So this product make it ensure that price risk is taken away before the transaction happens. In India, unfortunately, because there was no future market, we had term ahead market, T+11 day, T+3 months, or day ahead market, RTM. The market of day ahead and RTM, which should be the distress or last moment imbalance market. You are basically extra generation or low transmission network or some coal problem or some rail network problem. If they led to some shortages, they should be just match and grid should not be a problem. But those shortage market, those distressed market has become de facto price signaling market, and that's why there's so inefficiencies. When the future market will come, we do believe we'll launch quarterly, we'll launch yearly. We have very clear vision. NSE know what they're doing. So we'll come with a quarterly ahead, then we'll come with the yearly ahead, and then the CFD layer. CFD may come anytime once we get kind of a liquidity in the monthly future. So this is the commercial aspect, but now come to the very important aspect, and maybe my civil servant background, maybe my PhD in this subject, maybe my some exposure in derivative market globally allows me to think slightly broad way. I'm not very confined to treat the pure commodity. I know there's a public good aspect. Many times ये कॉल ले लो तो प्लीज ये कॉल ले लो बोलो सर कॉल पे important call ग्रेट इंडिया का many times such public good aspect distort the very way commercial transaction happening. So I was just attending a CRC meeting. I'm in Delhi right now because CRC had called us to us and MCX, and they are asking multiple questions because they are also excited to see the development in derivative market. But there are so many questions because being the regulator, being the ex-bureaucrat or being the ex-technical guys, their focus is spot market should not get unduly affected by the future prices. Would we see a lot of speculation? Would we see such a way that prices will go high? Volatility go high because FNO treated like very volatile thing. So anyone who understands the spot side and public good aspect would calibrate the launch of the product, the long-term vision of this product very smartly. I think NSE has that advantage because we are not launching this product today. For us, spot market with Polish India Limited, we launched 2008. We have got that 16 years of background in this market, where we had dealt with the regulator. We know the nuance of this. So we are offering an integrated platform here, not only future, but the spot understanding. And that makes us slightly ahead of the curve in terms of our vision, our offering of the product, and the way we are treating this product versus the other exchange which are planning to launch this product or have already launched. I would suggest, Tejas, now you take from the contract. You can start with the scenario planning, not issue. Thank you.
So the present option which has been available for the generator as well. Suppose you are just take an example. If you are a generator or then you are just generating the electricity of suppose 100 or 250 megawatt, then what are the options which are available with you? You can either go for the long-term PPA. You can sign some long-term power purchase agreement with some buyer, or you can sell your electricity on the trading like some the bilateral mode, or third option you have like can do the merchant sale as well on the exchanges. But here you comes the no future hedging which is available as of now for this. But the NSE has bring out this contract with this product where this given generator that they can lock in their prices by using this product as well. Same scenario. Suppose you are a discom trader or any retail consumer, and you have only three options where you can buy electricity from the by doing some power purchase agreement with the generator, or you can buy on the exchange as well, or you can execute some bilateral trading. So here again, the no financial contract is available for now. So this is the gap between the physical and the financial where the NSE has identified, and they have come up with the product which is called as the future electricity, which is already launched today. So which gives you a buyer so they can hedge their prices in the future and again the price volatility. The product specification for the contract is like the commodity name is the electricity future, and it is denoted by ELEC NBL. ELEC NBL, its meaning is electricity monthly base load contract. The contract will start. Let's start it as we launch today itself, where the last day for the trading will be the business day. The duration for the contract is from for 4 months, and the trading day will be from Monday to Friday as well. Session is from almost the 9 to 11:30 p.m. or depending upon the sunlight, 11:55 p.m. This fourth thing is very important to understand in the product specification. The price which you want to quote for the contract is for rupees per megawatt hour, and my per lot size means one lot size is my 50 megawatt hour. If I'm saying here 50 megawatt hour, it means 50,000 units. In terms of unit, it is 50,000 units. where my maximum order size is the 50 times of my trading units. So if my lot size is 50 megawatt hour and my maximum order size is 50 times, so if I multiply 50 into 50, that is 2500 megawatt hour. So if you ask me in terms of units, it's almost 25 lakhs of units. That is the maximum order size for the contract. The tick size for the contract is rupees 1 per megawatt hour. So these are the product specification which we need to understand for the product as well. I hope this is clear. Uh, Second specification, we have the like what exactly the margins and special margin or maximum open position are there. So as per the SEBI guidelines, my daily price limits for the is the aggregated it is 9%, where my initial and enhanced slab is like 6 or 3%. The margins which we are taking here is almost the 10%, where which will higher span. Below to that, the daily settlement price, which is the exactly the outstanding position in the future as well, and the final settlement price. So the final settlement price will be given by the PXIL as well. Like here we are taking the all the three exchanges, all three segments of volume weighted average of the day-ahead market of all the three exchanges, which will be given by PXIL. As this is the cash settled product and no physical delivery has been required, because for physical delivery of power, you have different power exchanges called as PXIN and IX or HPX. But this product is the cash settled product. Here, no physical delivery of power has been required. So this is the financial contract, and it is the cash settled product. So these are the technical on the specification of the product. Uh, Moving on to my next slide, this is the minimum and maximum capacity that we have calculated for the with respect to the different generator. As in the earlier slide, Sir has explained you what exactly the retail consumer is. So for this, every retail consumer or any commercial consumer having load of almost 70 kilowatt can become a natural hedger in this future as well. So with respect to the different generator, where it becomes a solar or it becomes a wind or thermal, like for renewable as well as the conventional side, you can see the minimum and maximum capacity, which we have calculated in terms of kilowatt and megawatt. So it is maximum, you can, if any thermal consumer having capacity of 4.63, then it can be become a natural hedger in the future as well. Below to that, this is the PXIL DDR price that which we are taking for the final settlement. Basically, the volume weighted average of all the three exchanges, which need to be shared by PXIL as well, where there are 24 hours in which you have 15 minutes of time blocks. So there are 96 time blocks where each 15 minutes of time blocks have different prices. Here we are taking the market clearing price as well as the traded volume for that block. This is the maximum and the level open position which one can have. So just an example, if you are a individual member, individual client, or just having a member, so you can have in capacity like almost for individual level, it is almost 3 lakhs megawatt hour, almost the 5% of the market share, where on the member level, you may have different clients with you. So the capacity is almost 30 lakhs megawatt hour, almost that is the 20% of the market size, where the depending on the different generation side, where it is renewable or it is hybrid or any conventional, we have calculated what exactly this is the open position one can have. Like if you are a solar generator on individual level, you can have an open position of 2.08 gigawatt, or we can have the open position in the member level, it is almost 20.8. So it differ with the generator to generator itself, where it depend like if you are a hybrid consumer or you are having conventional or the renewable supply as well. So this is exactly the overview of what exactly the electricity market is all about. This data, which is been shown in the
They just
yeah
go back.
yeah
I like to
okay
highlight certain things.
yeah.
Uh, just go to the previous one. Yeah, hold on. So why we are sharing this important? Because most of the time, a member like you ask us who will be our ideal clients. Who we should approach, because as a proprietary desk you can put some trades, but ultimately the signal of the prices or trading volume should come from the actual user. Because ultimately, if you're stuck in the open interest, you have to serve the real customer. So we decided to share all these volumes, what kind of positions you can take, where you should reach, So any individual client which is having 2.08 gigawatt, 2000 megawatt wind around 1.2 gigawatt, 1200 megawatt, thermal around 500 megawatt, hydro around 500 megawatt, hybrid means thermal, solar, hybrid around 833 megawatt. Those are the ideal client in terms of pure hedging as a generator. So you can approach them. Every solar generator, every wind generator, every thermal generator, hydro generator. Your question would be, even if they're selling on PPA market, they have always got some surplus capacity. And many times the surplus capacity they just inject the grid without getting any price whatsoever. Can you use their additional capacity, or can some new merchant capacity can come? So these are the natural hedging position allowed. As a member, you can take up to 20 gigawatt open position if you've got a solar asset. So this slide is basically to attract more investment, in terms of merchant, in terms of what kind of positions you have been allowed to. These are very big positions. Those CRC, Central Regulatory Commission, spot regulator, was very clear that we'll give the good bar in terms of not allowing too much speculation, but they have allowed reasonable flexibility to us in terms of taking the member level position. 21 gigawatt today, it's only with Adani's, Renew is also at 15 gigawatt cumulative. So these are very big, huge positions. I do believe these positions are reasonable enough to take long positions. And also, if some FPI is coming and they like to hedge their FDI's interest or investments, these are good positions to take, because some FPIs are in touch base with us and they're talking about us, how they can learn this so that their FDI arm can come and invest. So just want to highlight this. They just continue, please.
Yes, as you are aware, the total generation in the country in 24-25 was estimated as at 1900 billion units by Central Electricity Authority, and of which, considering 1900 billion units of generation, nearly 21% is used for internal consumption, and there is also the technical and commercial loss under the transmission and distribution assets. As earlier in the presentation, we had said that we have a wire network comprising of transmission and distribution network, and there is also a retail supply, which is also handled by the distribution licensee, wherein commercial losses are incurred by them. So this mix of auxiliary consumption, technical and commercial, transmission and distribution losses accounts to nearly 21%. And after this, the total consumption or the total usage and from which the transactions happen is primarily 70% is by the the long-term agreements, which are from varying from nearly 15 years to as long as 25 or 40 years, depending on the type of generation sources. Generally, the gas-based plants are about 15 years PPA, whereas the hydro-based plants can have PPAs as long as 40 years, and the conventional plants like coal or lignite can have 25 years, and similarly, wind and solar also has 25 years. After the long-term power purchase agreements, the other set of transactions which have materialize on the exchange platform and also through traders is about nearly 238 billion units, and these are for tenures less than a year. Of which on the power exchange platforms it is about 144 billion units, comprising of different products, wherein trading for as for delivery durations as short as 15 minutes to up to 90 days or 3 months ahead get materialized. And similarly, on the OTC platform, wherein traders contribute to the transactions, it's about 90 billion units. And then we have the demand supply settlement, as we had seen earlier in the presentation, that the demand needs to balance with the supply. So, since demand supply and there are real time change in demand and supply that takes place, so there is a balancing unit of nearly 10 billion units. So net net, what we see is the short-term transactions of nearly 238 billion units is likely to get migrated into the futures market in a very short period of time. And development, considering this development, the envisaged businesses can be, or the potential businesses that we can look at, can be taken from the other markets which already have futures. So Europe and Nord Pool is one of the markets. Then we also have markets in US, Singapore, Australia, and in UK. And when we look into the matured markets, Nordic market has started operating way back in 90s itself. And over there, today, the futures volume contribute to about nearly 3 times the total generation. In nascent markets like Australia and Singapore, in the earlier stages, the derivatives volume were in the range of 5 to 6 times. Considering India's potential or India's gross generation of about 1900 billion units and similar potential that we can look at the way the derivatives market will evolve in the Indian ecosystem, we are looking at nothing less than 3000 BUs when average derivatives to generation ratio across key countries are considered, and as high as of nearly 8000 billion units for derivatives to generation ratio if we compare that with the EU. So this is the volume that we expect going forward. And when we look at how the introduction of futures has impacted the electricity ecosystem in few countries, in US, in EX, it has led to stabilizing the wholesale prices. In US, it is seen that volatile spot market volatility has reduced by nearly 50%. And in the Chinese market, it has provided long-term signals for future investments. So net, what we see is after introduction of futures market, there would be stability in wholesale prices, and the derivatives market would also provide signals for future investments in the sector. And what are the factors that affect the futures market? It could be demand and supply trends. So as demand and supply varies from season to season and from calendar to calendar, so demand and supply trends play a major role. Availability of power generation plays a major role. During the day, the solar assets are available during solar hours, which is from 10 to 4. And subsequent to that, as solar recedes and wind availability is intermittent in nature, so the cheaper generation sources, as and when they are available, they can affect the prices. Whereas at the other periods of time, unless there is supply from hydro generation, the capacity that comes in to meet the demand can affect the pricing that takes place in the spot market. Similarly, seasonal and weather factors also play a role. As everyone of is aware, the seasonal patterns the seasonal patterns could be based on monsoon patterns or the wind patterns or the summer patterns. And generally, it is observed that during summer months, since the demand picks up, so in the spot market, prices increase. In the monsoon season, when the commercial load or the electrical load or the AC load reduces, at that point in time, there is softening of prices. Similarly, during the monsoon months, since there is good amount of rainfall that happens, so the agriculture consumption or agriculture load due to different cropping patterns that exist, there also it reduces. So this plays a major role. So seasonal and weather factor plays a major role in availability and in consumption, and hence that also affects the pricing in the spot market. And then there could also be market demand forces which could influence trading volumes. It is observed that generally during state elections, the state discoms tend to maintain the 24-hour power supply commitment, due to which there could be desperate buying, and that could lead to increase in the spot market prices during that period. So that is also a factor which needs to be considered from time to time. Hence, all these factors play a role regarding how the prices get discovered in the spot market, and that's how it gets related in the futures market. Going forward, how is it that or what is it that we can look at, what type of products will get launched, the larger volume markets can be seen into the a reference can be taken from the larger derivative volumes market, and then we can and then we can see that how the different tenure products could get evolved in the Indian electricity system also. When we look at the EX market, they have the futures product for different tenures. You have the yearly product, you have quarterly product, monthly product, weekly product, a day product also. And since tenures of different products are available, the longest tenure product generally gets the larger volume. Hence, yearly product takes nearly 70% of volumes, followed by quarterly, and monthly is about 13%. So going forward, as the monthly products mature, NSE would be seeking permission for introducing quarterly products followed by yearly products from SEBI. And in near future, we see that the contract for differences could get implemented in a very short period of time. And considering these products, and also what is it that may, in addition to the base load products that NSE is introducing, what could be the other type of products? Yes, in the Nordic market, they do have products, the futures product to be take care of the peak load requirements. So when we say peak load, in India, we have two peaks, which is primarily the evening peak from 6 p.m. to 11 p.m. And you also have the morning peak, which is from 7 a.m. to 10 a.m. So these two peaks could also become a market going forward. And in the Nordic market, the peak markets are futures are settled on weekly basis, and forwards could be for monthly, quarterly, and yearly. So net, considering the way the products have developed in other markets, what we see is the futures market could evolve for a business proposition of nearly 175 US billion dollars to 475 billion dollars going forward, and that's how the Indian market is likely to evolve. And when we look at volatility, yes, the in the day-ahead market in the previous financial year or in 24-25, volatility seems to be reducing from 20% as high as in February 24-25 to 16% sometime in March. And similarly, when it comes to the previous 3 months, a day-ahead market volume, at least in the month of June, it is observed that the volatility has increased. That could also be because of the more requirement coming in during the summer months. And when we look at the longer period of 23 to 25 June, the volatility spikes generally due to the short-term requirements that may come in either due to near to the day-ahead market delivery or because of different instances, maybe a drop in generation, maybe outages in plants, maybe non-availability of scheduled generation from solar and wind, because of which there could be volatility in prices. So all these factors need to be analyzed and studied, based on which we can decide that how the futures market is evolve. And in RTM also, it is observed that now this analysis is for the previous 3 months of April, May, and June. During RTM also, there have been increase in volatility, and this could be primarily during, and this is observed during the summer months, and this could also be related to availability of generation, spike in demand, or maybe change in the schedule due to outages in plants. So all these factors need to be considered when the futures market need to be decided. So we have also depicted the illustrations related to how a buyer would what is it that the buyer can do in the futures market. Generally, if we consider a case of a buyer who intends to purchase nearly 10,000 megawatt hours of electricity, one in the forward market on the power exchange for the month of August, then what is it that he benefits from by participating in the futures market also? Considering day-ahead market price of about 6 per unit or rupees 6,000 per megawatt hour, and if he enters into a futures contract and if he purchases a futures for contract for 6,500 during the month, now there are three possibilities. Either the buyer continues trading just physical power without taking any position in the futures market. Second one is this buyer simultaneously takes a long position in the futures market. And third is he takes only the futures market position. So considering all these three scenarios, net what we see is an entity that has participated only in the physical trading and not in the futures market could have a loss of about nearly 700 rupees, and his effective purchase price could be 7,200, depending on the settlement price of 7,200. In case if the entity also purchases or also purchases a futures contract, then he benefits from increase in prices in the futures market. If it increases by 700 rupees, then his profit could be 700 and his effective purchase price would be 6,500 rupees. And similarly, on the other hand, if someone who is just trading in the futures market and has not and is not intended to cover his physical position, then he benefits from the profits in futures market of about 700 megawatt hour. And in case there is drop in the futures market prices, and if it reduces to 5,800, similar it is observed that an entity that has purchased the futures product at 6,500, he incurs a loss of about 700, and his effective purchase price would be 5,800 from the physical purchase of power and 700 loss that he incurs in the futures market. So his landed cost will be 6,500. On the other hand, if it is only futures market, then there is loss of 700. And someone who has not participated in the futures market, he continues to purchase at the price of 5,800, which is the settlement price in the physical market. So in case of buyer, if there is an increase in price and if he purchases and if he hedges his position, there could be net purchase of about 6,500. And if in case it is a selling market, then his purchase remains same at 6,500. So that's how it is. Net there could be loss and gain as depending on at what rate he purchases in the futures market also, and how he covers his position both in physical and financial market, and then based on that, different scenarios can be analyzed. The trading scheme that NSE would be introducing is, or it has already introduced from today is, at any given point in time, the DDRs for previous 3 months would be exhibited. There would be the bid-ask quantum information and price information for existing orders that have been received. And there will also be information related to what is the futures price for the next 3 months contract. And currently, as we are looking into in July, today the screen also exhibits what is the futures trading price in the contracts for August, September, and October, if any, that has materialized during the day. And this is how the screen looks like, the trading scheme on the NSE's web page. Under the energy column, you will come across commodities, and there you will get the electricity futures, and this will be nomenclature under ELEC MBL. So ELEC means electricity. M is for the monthly baseload contract. M is the monthly baseload contract. And when we look at net, what is it that the futures market is provide for? The futures market takes care of benefits to all the stakeholders. So when we say stakeholders, it could be generators who are selling entities, and these generators could be your conventional generators, your renewable generators, and then in addition to generators, on the buy side, you have the discoms, which are the largest purchaser for selling in the retail sale. You also have the commercial and industrial consumers who are already with large load industries for whom the electricity purchase is an expense item, and they can effectively plan their power procurement, and by using the futures market they can improve the financial stability. In addition to this, we also see a big market for financial institutions and traders, and also going forward, the retailers, primarily the retailers with at least 70 kilowatt capacity, who would meet the minimum trading unit requirement of 50,000 units or 50 megawatt hours, they could benefit by participating in the futures market. And when we say retailers, we are looking at uh, hotels, malls, corporates, alternate HNIs to become natural hedgers and benefit from this derivatives market. And going forward, we also see that for financial institutions, it could be opening up a new trading avenue as part of the energy desk or the power trading desk. And also, the futures market will provide price signals for increasing in foreign investments in the sector, and also in the lead to much larger market participation. So, the monthly futures market is expected to provide a single price for single grid. So, India has the unique proposition of one single grid supplying to all parts of the country. So, it fulfills the government of India's objective of one nation, one price, and one grid. So, that's all. Thanks.
I'm now starting answering the question answer. We have got two question. Which
Yes.
month I'm reading the question, or Tejas, you can read the question, I'll answer it. Tejas? There are two questions, but I'll request the participant to populate the chat box with a question, or your tag team to
Yeah.
populate
Yes,
the chat box with a question.
viewers,
Yeah.
you are
First. Okay.
requested to send your questions. We'll be taking out live. Please send your
Yes.
questions on the chat box.
So Tejas, can you read the questions, please?
Yeah. The first question is, which month will be more beneficial for electricity derivative?
Now, this question seems to have a very pointed question. Are you asking in terms of volatility or in terms of demand, in terms of supply? I think the good part of electricity, it is a multivariate, you know, price determinant equation. So it is not only the historical price which affect the electricity, but the weather also affect the prices. So if I like to answer this question, summer months will be good in terms of erratic behavior of generation, transmission, demand. Summer month in terms of volatility will be reasonably good because there's a consistent high demand. Even generator try to meet it. Many times small shortage in coal and here and there affect the supply. So hedging, if you like to really use it for hedging or some kind of arbitrage, focus on Feb to, I would say, June months to begin with, and then August, September, October, November. December, January, Feb is a little bit less volatile in terms of demand and supply. So summer months and early in winter months. Second question is, what is the
So,
base?
I'll read the second question. What is the base for these electricity futures? Like for metals and other energy contracts, like crude and natural gas, we have US based contracts. What is the base for this electricity contract?
I think we have covered that in the entire presentation when we did the contract specification.
Okay.
Yeah, so I think I just like to showcase that we have a reasonably good liquid DAM market and also RTM market, and most importantly, our OTC bilateral is there. So roughly 12% short-term market emanates some price signal. At this stage, what we are doing, in fact, I'm talking about NSE. We are taking all the DAM volume of all the three exchanges, all the segment, conventional, green ahead, high price. But at the same time, we are in touch with regular base with the big traders who are taking care of OTC bilateral because most of them are now with us. And to give a brief, what exactly happened today, which allowed us to give such kind of volumes is when we were opening the price, we were very clear that the because you cannot depend totally upon the July VWAP to predict the prices of August, which is a different month in terms of its demand side or supply side, or very much weather. July is full of water. August by second week, you start seeing some kind of rains go down. September again very humid, and different regions work differently. So we thought why people should base their decision on basis July web to take a call on the August. So we spoke to multiple spot players, and being a from power sector, I understand to whom I need to get the right information, and we got a good idea about what are the prices going on the spot. So we club our spot insight with the historical averages, with prices, and our multivariate model which we are applying in terms of price discovery, and then put those prices, and you can see the prices has gone down. So many a time such smart additions in terms of equation or advanced input from the traders which are sitting on the actual market help us, and this you will see the distinct advantage with NSE going forward because we have our own power exchange of India Limited.
Right. Right.
We
I
have
just
another two questions
yeah.
as well. Can we trade this derivative also like crude or natural gas? And what exactly the minimum margin requirement as per the retailers?
Yeah, you are trading it. Can we know people have traded today? I'm seeing one lot, two lot. So very much allowed. The margins is minimum 10%. So if the contract is around now less than 2,25,000, 2,10,000, 2,20,000, 10% of that is to 22,000 roughly. But I would say keep certain margins because certain time will be very volatile, especially the last week of the month when the settlement will start happening. For that time, you can get additional margin calls. So I think 25,000 decent money to start with, and if 1 rupee tick is making you roughly good money, roughly 50. How much they are making with 1 rupee stick? They are making roughly
50 rupees. Yeah.
50 rupees, which is a good money, because transaction charges. The good part of NSE is because it's a very important product for us. We are not promoting any. We are not charging anything here. So net, we were working on if 2,50,000 contracts there and buy sell 5 lakh rupees. So CTD is coming around 31 rupees plus some VAT. So against 31 rupees, you are getting a 50 on one tick size. 3 lot you make 3 times. So return is really good in terms of simple. But please, as a retailer, be very cautious in terms of taking your calls. The futures, anyways, you have to read a lot. But initially there will be arbitrage opportunities. Try to take advantage of this. But please read. We are giving a lot of data here. Because this question came from a retailer. I can see. Please check the spot written on NSE website. Why don't you read? Open it. I like to show them. Anil. Or
Right.
anyone has a screen, just open the NSE site. Show them the expiry of all the 3 months. Let me show you, tell them what exactly they should see. They just,
Yes.
Yes, sir. Yes, sir. We are populating that.
yeah.
Itu nakon.
Yeah, so I just want to highlight.
Preeti Savla Ikai, WA Business Audio.
Yeah, so just show them the first line. I like to make it clear the spot prices being shown here is not actually the spot in terms of what is happening. It is the spot for today's price before 3 p.m. and after 3 p.m. we get the price for tomorrow. So this is the day ahead market price tomorrow because we clarified to you that prices can never be real time. Either we get day ahead time or we get a real time. Real time prices which you are showing it here is half an hour before. So just see the spot here. Just put show them the rest of the future, gentlemen. Nothing else, rest of the future. Don't confuse them. Yeah, so this upside, right? Open it. Not energy future, like MBL.
Yeah.
Yeah, now what happened? I can see it here.
Yeah.
Is the electricity future? Yeah.
Yeah.
This is energy future under like MBL. Just see this spot, just put your cursor on a spot. Tejas.
Yeah.
Spot. Yeah, what is this spot? This spot is nothing but today at 3 p.m. we have got the prices for full day tomorrow. So whatever this price is, in terms of numbers, this number is for tomorrow's day ahead. Okay. They just now go back to the contract, click this I below RTM price. I.
Yeah.
Yeah. And this is the RTM price, real time price for next half an hour, Now see the disconnect. The spot price is roughly 42 something, 4200, and RTM price are showing less than around 2600 something, 2900 whatever. So these prices are for real time today, 14 July for 6:30 or let's say 7 o'clock. This is called RTM market rate, right? Last moment transition congestion, whatever is happening, and the spot. Go back to spot again. This spot is price discord for tomorrow. Please understand the differentiation here. Show them the spot data statistics also. Within I, there is a link. Yeah, click the link. Yeah, see this. Enlarge it, please enlarge it if you can enlarge the page. Yeah. No. Show them the entire page.
Okay. Yeah.
Yeah, so this is the page. In fact, go slow, go slow. So we have populated with a lot of data in terms of one very informative article, one masterclass you taken by me and Anil, then statistics on the power generation transmission corridor, weather patterns, regional imbalances, and then last but not least, what is CRC, short-term market report says, all the circular, how we do the settlement, how we do the LES, everything is here. Please make yourself acquainted with this data before trading. Okay, even the margins are here. Next, please. Any other question, Mr. Banerjee?
Yes, sir. I had a question on the particular contract that you referred to. You in the presentation talked about the CFD. So are you referring to contract for difference?
Yeah.
Okay. So that you're looking to launch later on, right? Okay. So now coming to the pricing, let's say the clients are trading, like I'm talking about the speculators here trading this market, because we have a lot of retail clients here. So the current RTM price is way below. It's around, I think, if I
But this is
saw it
July.
correct.
This is 14 July. Don't base your assumption on this.
Okay, so because we are not trading the day ahead market, so it will be for tomorrow, right? Which is around 4,300. Okay.
But this is
So
again July 15th, not 1st August, our entire month of base load.
right. So the final settlement price for August contract, the calculation will start from 1st of August.
Yep.
Across the three exchanges, it will be
Yes.
taken, right? So volatility should ideally start to fall in the near month contract as it nears, I think after a week into the expiring month, right? So it's now much more free to be quite volatile.
No, not exactly. First of all, basing your judgment on this pricing
Okay.
may be misleading. Yes, sometimes this prices because contract gets rolled over. Many times people buy in bundle of 3 months. So maybe people are paying a base load price for June, July, August in one go. So this price is some bearing. I will not say it's not bearing. But when you come to very specific to my contract, which is August contract, it should be independent phenomena, mutually exclusive. So in that case, you should only focus on the historical volatility of the August. What is the average pricing of August in the past? Those are data are available, not this very big thing.
Okay.
And based that, try to take a call. Don't make it a pure financial derivative that if today is the S, then I multiply it by e to the power RT and then some convenience yield. There's no convenience in the electricity.
Right.
Please base your judgment on that. And secondly, I would not say it's a speculation per se. I like to be away from speculator at this stage.
Okay.
Speculator will be, I will say, this arbitrager, risk taker, people who have got some kind of understanding and they think they can play with the pricing. They have got some call on these prices. Because in the initial days, information asymmetry between the participant itself lead to a lot of compute edge. Like between us and other exchanges, we have a lot of knowledge. We have got our own exchange. So that compute edge is being reflected in the day one, what we did at 8,000 contract, right? Where did it come from? It's our historical legacy. Same thing. Many people who are in the common investor, they have some understanding of electricity market or being a trader have traded natural gas because there are linkages. And can they take advantage of those knowledge? Yes, they can take advantage. I would say they are arbitrager. They are arbitraging upon their knowledge base with the present informity in the market. Market will not give this opportunity for a very long time. It will go away, and the wrinkles will go away. So I think at this stage, I'll welcome all those guys because we need efficient market, we need liquidity. But people who are well versed with this information, people who understand how the energy dynamics work, energy market work, they can read, research, and then can put some trade position. We'll be very happy to help them. Pure speculator, I think we should avoid them.
Right, right, sir. So, yeah, in fact, the particular URL which you shared is quite helpful because it will give us and also the entire chain of clients the access to the information. So, yes, we are quite optimistic that, but this is a new product, so it will take a little time for us to make the end user more aware. But of course, we are seeing a lot of traction from clients, both the corporates as well as from the retail. Yeah,
Great. Some people are hesitant to ask few questions. If you allow us, we have recorded 33 questions, which
right,
which were covered in our presentation, but maybe around 50% now has been covered.
right, right,
So I would request Anilji, if you got that link, just run for them the FAQ part, which you both have recorded. It's now part of public record. Just run it for them because I think it will be a lot of clarity in terms of spot, in terms of members of PRs, CRC versus SAB, how do they operate, charges, who can participate, not part charge, so international market. Let them run 7 minutes or 8 minutes of that video. Do you have that video,
Yes,
Anilji?
sir. I will share. I will share. I will
Yeah,
share.
just run few initial minutes.
Okay.
Let them absorb this content, and it's available on the put in the chat box also, so that later
Yeah.
on they can see the entire video. So we did the presentation before you. There are two, three extra slides on the how the power market will evolve, how the electricity market is evolving. Those slides are very interesting. I have spoken
right.
about that. So, is option available for hedging? No, right now, options definitely not in our foresight right now because we need to achieve a lot of liquidity. We do believe that till the time our future contracts or CFD is liquid, we should not split the liquidity among the options. So, at least for next 1 or 2 years, we are not seeing into this. It's not in our mind right now. He's operating this. This
Yes.
video is good. I think. Tejas, can you
Yeah, I
make
am
it?
sharing, sir.
Yes, yes, we are uploading the video.
Anilji, I would say let Tejas do it and you do that job of event, huh? I'm sorry, I'm speaking. Okay, continue. Tejas, show them the video.
Yeah.
Starting Q&A starting. Mm.
The audio is, yeah.
Yeah. Host is not allowing to share the share sound with participant. Please allow me to share sound. Hello, host. Please allow me to share the sound as well. It's not showing the
to me.
It's shared.
Yeah.
Gathered here to speak about a very important topic, launch of electricity monthly future on NSE, which is going live on 14 July 9 a.m. We'll be talking about this topic, which is quite relevant, and we're also taking some question answer here. With me, my colleague Anil is there from Power Exchange of India Limited.
Good morning, everyone. I am Anil Kale from Power Exchange India Limited. I head the strategy and regulatory team at Power Exchange India. What is an electricity future?
Electricity future, a contract where participants can lock in the price of electricity today for a specified future month ahead. No physical power is delivered.
Okay. Who can participate in electricity futures trading?
Any eligible trading member, corporate buyers, generator, retailer, or financial institution approved by SEBI can very well participate.
Can retail investors participate?
Yes, retail participant can invest via their broker, subject to exchange norms and risk disclosures.
Is there physical delivery of electricity in these contracts?
No, these are cash settled contract. There is no physical delivery required. However, please take due risks, due chances in terms of reading all the materials before taking any position here.
What index is used for settlement?
So to begin with, we are using the Power Exchange of India Limited equation, which is taking volume weighted average of all the day-ahead markets in terms of power being traded there. When we taking the power, we are taking the green day-ahead market power. We are taking conventional day-ahead power market. We are taking high price power also.
How does a buyer benefit if the contract is cash settled?
So if buyer is taking a long position, and if the future prices goes beyond the price which had the strike at, he makes cash and he makes gains. If the prices goes down against this strike price, then he make losses, and in that case he bear the losses. Both are cash settled. There is no need to give any electricity supply in physical market.
What happens after I buy a futures contract? Does my supplier reduce my bill?
No. Electricity future contracts are being traded on NSE, where your utility bill is being served you by your utilities. Both are very different things. Your profit and loss of exchange is settled in cash, where utility bill you take the electricity and give price in cash. So both are very different.
Who handles clearing and settlement?
NSE Clearing Limited, which is a QCCP rated entity, handles all settlement and margining.
How do I estimate a fair price of electricity when it differs city to city?
So the index which we are taking here, Anilji, is very much national in nature. Not only we are taking one exchange price, we are taking all the three exchange volume weighted average. And this index is kind of national in nature, taking care of interactions, dispatches happening across India. So it doesn't affect city to city. It's a national average and settled accordingly.
What are the extra charges beyond price like transmission, cost subsidy, etc.?
As such, similar to spot market, there are no charges here. It's very, very different here. In a derivative market, we only charge CTT, which is Commodity Transaction Tax, and some VAT. NSE is promoting this product because it's a very new product and it's a very transformative product for power sector reforms. So for 6 months, NSE is promoting this product by charging zero transaction charges. With no cross subsidy, open access, or additional surcharge being charged by NSE. We don't charge on any other commodity also the same.
Can this help industrial buyers control costs?
Yes, buyer in advance can hedge their price risk by locking their prices in advance.
What are the typical use cases of electricity futures in India?
To begin with, when it is confined to ultra HNI, corporates, industry, SMEs, Discom and generator, I think some of the use cases could be Discom can lock their peak season rates, generator can secure their merchant revenues, industries can fix their input power prices. And most important, even traders, which are a very important part of this integrated market, can take some position being a hedger or as a speculator or many times an arbitrager also.
How do we track electricity demand or supply trends to decide trades?
So at this stage, spot market is quite liquid, and we can go to the sites of all the power exchanges India Limited, because every 15 minutes they are putting their prices in the day ahead market. In the end of the day, almost at 4 p.m., they're also putting their prices. You can also track POSOCO, CA, NLDC, and other power exchange data to keep abreast with the latest price trends.
Is any real-time data made public by NSE?
Yes, NSE commodity segment. When we'll make this product live, you can see the spot DAM price. You can see the real-time price, which is being updated every half an hour for our participants. At the same time, we'll show the what kind of volumes we have done, what is the open interest. At the most important thing, we'll also show the number of lots in numbers and number of lots in volume, which is megawatt hour. Most important, we'll also show the volatility increasing or decreasing every hour.
What is the duration of the contract?
Duration of contract is only 1 month to begin with, but NSE has plans to launch multiple products. I'll talk about that later.
Can electricity prices be benchmarked with global trades?
Not exactly, because we are taking at this stage the volume weighted average price of our own exchange, which is our own domestic market. And India is a very liquid spot market. Almost 12 to 14% power being traded, be it in spot, be it in DAM, RTM, or OTC bilateral. I think those prices are emanating from our own country. It shows my consumption demand. It shows my generation pattern. I think we need not to see any global indices right now.
Are there similar products in China, Europe, or any other international markets?
Yes, electricity future or electricity derivative market is a very mature market in some of the countries, like in North Pole, Norway. It's operating since mid of the 90s, 1994. In UK, it got started in 1999. In US, it started in 2000. In Australia, it started in 2006-8. And in Singapore and recent few editions in 2015 onwards. So I think it's a very, very liquid contract, very liquid market across few developed countries.
Will generators and discoms only lead pricing or participate too?
Both. I think being the anchor large generators or being the anchor large buyers, their volume should be very high. So it will definitely affect the prices when they take liquid positions. However, they can also follow the trend. The good part of this liquid electricity market is everyone is going to be a price taker, not a price maker.
Is this market significant for small participants?
Not in the beginning, but as the time will pass, as more and more contracts will be launched, and the liquidity increases when the prices get stabilized, I do believe retail will also participate, and it signify their trading volumes also.
How will contract for differences fit into this later?
Contract for difference is a very good method to divert the long-term PPA volume to short-term market. And secondly, of late, it is being used for some developed countries like UK, like Australia, to attract the renewable generation capacity. We do believe that CFD in India, when we launched, which NSE has plans to do, it will do both. It will not only attract the long-term investment in renewable, but at the same time, it will transfer the long-term PPA volume to short-term PPA volume.
What if my futures contract is loss-making?
See, it is cash settled. And when you enter into future, we do believe that you have done your own research. You have a take on the price. If the price goes against you, you book the losses, pay cash. There's no as such compulsion of taking or keeping the delivery with you. It's a cash settle. Sometimes you will gain, sometimes loss. But again, I said, do your own due diligence, do a lot of research before taking any position here.
What is the role of power exchanges in this market?
Power exchanges are the de facto spot exchange. They are giving us the base prices in terms of settlement, day-to-day basis, RTM basis, and for monthly settlement. And they're also giving the actual signals. The important thing is, future is nothing but a hedging instrument. All these far market power player ultimately look towards the financial future market for hedging the prices. Spot and future work in a virtuous cycle. Without spot, a future cannot be there, and without future, spot cannot hedging tool. I think this is a good time for India. At this, we have both the markets now.
Can we hedge long-term power through this short tenure products?
Yes and no. Yes, in a sense, for 1 plus 3 months, you have this contract. So you can foresee the 4 months contract, 4 month prices. But when you say long term, in Indian parlance, long term means above 1 year. NSE has plans to launch quarterly 1 plus 7 quarter ahead. And NSE has plans to launch annual contract 1 plus 5 years ahead. I think once those contracts will be coming, the hedging or the price signaling for long-term contract will be better. At this stage, you can roll it month on month, but these are, I say, short-term price certainty or price hedging happening right now.
Where can I learn more about the contract or try mock trading?
NSE, while launching its contract, is giving a lot of information in its website. We have a dedicated page on our website giving you information around many aspects of spot trading, be it power generation volumes, transmission corridor, weather patterns, or any other incident happening which is affecting the generation of transmission. Having said so, NSE would keep doing the webinars like we are doing today. We'll be doing a lot of workshop, physical. We'll be meeting a lot of industrial and commercial and residential customer too, to teach them about this. You can join this workshop, or you can join any of the webinar by purely registering with our webinars.
How does transaction in power exchanges differ from transaction in electricity futures?
Very brief, I'll answer. In the spot power market, you are actually physically trading the electricity. Having said so, only few players like large generators, large discoms, large traders, and heavy industry customer like 1 megawatt above customer can participate. So there are a lot of restriction in terms of participating in the spot exchanges. In terms of uh, future market, there's no such restriction. Any retail buyer through their broker with proper risk analysis of their profile, proper studies can participate. There's no bar. So in the spot, you deal in physical. In the future, you deal in cash. So there are restrictions in the spot market. There are no restriction, but here you have to be very informed because trading in the future option many times quite risky.
What is the mix of participants in power exchange and in the futures exchange?
As I said, this interaction between power exchanges, which is spot exchange, and NSE electricity future, which is the direct derivative exchange, is going to be very virtuous. We are dropping the link so that you can circulate among your members. If participants are willing, if they're willing, if it's not taken too much time, we can also have a question hour session. Otherwise, let's get it closed because I think already taken around 1 hour, 30 minutes. It's a long topic, we understand, but we are trying to put all the data, all the information in one go in one spot page. You can visit that and learn a lot. Okay. So, Mr. Banerjee, if
Yes.
any more things to be shared or spoken or answered, let us know.
No,
Otherwise, we are
I think it is it was quite informative, and the kind of information which you have shared, and the link, especially as I said, that that URL which has all the details, the recorded videos, and now this FAQ which you shared. I think that will help us to also reach out to the end user and communicate. So yes, I think it has been quite informative.
So we have shared the link. I can see, but I
Yes,
will not leave you high and dry. Can we do some question answer because I'll always see the outcome. People have learned. People have got something from this session because we have given precious 1.5 hour. If you allow, we can ask few questions and then you can earn the prizes also. You ask your participant, would they be interested?
actually, so this is a YouTube live, so we don't have a control over the two
Okay, got it, got it. No worries.
feed.
So we have put this link, immediately put in the link, and
Sure.
we'll drop few question also. You put
Absolutely.
that YouTube link only.
So we'll
Tejas,
share it on the social
share
media.
few quiz questions with them,
Sure.
and
Yeah,
let
sure.
join them in the YouTube. Okay.
Yeah,
Absolutely.
sure. Sure.
Thank you
Thank you
so much,
very
sir.
much. Gauri, would like to say something? You are muted, Gauri. Yeah. Yes, please.
Yeah, so all I just wanted to say is, we had, I think, really wonderful session with also the FAQs being run in such a nice way. I think this would have been even much more engaging if we had direct questions from the YouTube viewers. However, like Anindya just said that they'll be able to kind of collate once probably those Q&A comes, and then we can touch base with them with the required answers. And Dr. Ahuja has mentioned that we have received an excellent response on the day of launch to this product, and in fact, we also see users, active investors from Kotak inquiring about the same and participating actively. And we also look forward to hear and have more such sessions from you. In fact, if there are any questions that are coming as a follow-up to this session, we'll be more than happy to kind of do a series of webinars, or even meetings in-person meetings. If any of the corporates or clients have any queries, will be available. And thank you very much, Kotak, for giving us this opportunity to interact with your stakeholders.
Thank you very
Thank you so much.
Really appreciate that.
Thank you, Mr. Ahuja. Thank you, Gauri. Thank you. Thanks,
Pleasure.
all of you from NSE.
Thank you. And this is just a beginning. Okay?
Sure.
Keep engaging with all of you. Thank you. We are going to
Thank
launch
you,
some
viewers,
products.
for joining us in this interactive session.
Thank you, Anand.
Thank you.
Thanks to everyone. Thank you.